Now, we are just 10 seconds away from the closing bell on this Tuesday. Let's go ahead and take a look at the closing levels as we approach that bell and hear the ding, ding, ding. We're looking at drops into the close with the S&P 500, which was briefly showing a green about 10 minutes ago, 15 minutes ago, now down about 0.25%. Looking at the level, though, of just about 1060 and change there. Take a look at the Dow falling almost 50 points, 97.43, the level there, and the NASDAQ down about 0.33% at 21.23. Consumer confidence numbers came in worse than expected, indeed falling rather than rising today, and that took a little bit of the air out of this market. All right, let's get a breakdown of what else drove the markets today. Suzanne O'Halloran joins us from the floor of the New York Stock Exchange. Again, Laura Lee from the markets desk taking a look at the one-year anniversary of the Dow's worst point loss ever. Brian Luke is taking a look at the regional banks. And still with us, our featured guest, John O'Donohue from Cowen & Company. Suzanne, though, I want to start with you. What's going on?
You know, we wrapped up, Matt, what traders are describing as a quiet session. That said, we had some pretty encouraging profit news or profit updates, if you will. Gannett, a standout. Those shares rising 17%. The company saying that the third quarter is looking better than they initially thought. They didn't say ad demand was rebounding, but they are seeing some improving publishing trends. So Gannett, the number one stock in the S&P today, and also giving a lift to other newspaper stocks like Washington Post, New York Times, some of the most troubled companies during this recession. We also heard from Walgreens today. Walgreens reporting better than expected profit and sales. Not only are they selling a lot of pharmaceuticals, they're also selling a lot of consumer staple goods. Their CEO said they're on track to save $1 billion by 2011. And also CEO Greg Wasson saying that they will continue to evaluate potential acquisitions. Walgreens, another standout, giving a lift to CVS. And actually, the discretionary and staple stocks had a pretty decent day today, considering we didn't see a big move in the broader market. We also had Citigroup turning more positive on Dr. Pepper and Coke. They feel that earnings growth is ahead for both of these two soft drink makers. Now, the markets, Matt, were not able to make any noticeable move higher despite these good stock stories because we had weakness in big names like tech, specifically the chip stocks fell, energy stocks fell, telecoms fell. So those really kept a lid on any potential gains we had today. And, of course, MBIA also lower on that credit downgrade from S&P. Shares of the bond insurer lost about 4%, the worst S&P stock. Matt?
All right, we are seeing, I want to break in here quickly, Suzanne. We're seeing Micron earnings coming across the ticker. Micron Technologies coming out with a fourth quarter revenue of $1.3 billion, beating the estimate of $1.28 billion just slightly. A fourth quarter loss per share of it looks like 10 cents with a $12 million restructuring charge. The loss estimate for share was $18 billion. I'll wait and see the comparable number, but it looks like they're losing about 10 cents a share. That includes a $12 million restructuring charge. Indeed, however, they have beaten on the top line, which is interesting because we've been seeing tech companies, of course, this quarter and for the last couple of quarters, beat on the bottom line, but miss on the revenue. So here you see the shares year to date up about 5%. Right now, the after hours trade gaining about 2.5% there at $8.60.